In an era characterized by rapid technological advancements and global economic integration, the process of digitization has emerged as a critical catalyst for transforming companies and the entire economy. The digitization of industries and companies encompasses the adoption and integration of digital technologies into various aspects of business with the goal of enhancing efficiency, competitiveness, and innovation. Although digitization offers vast opportunities for companies, it also presents a unique set of challenges. Issues such as digital divide, data security concerns, or the rapid obsolescence of technology are among the problems that organizations must navigate. And in particular, small and medium sized enterprises, which are the backbone of most economies and significantly contribute to job creation and economic growth, face distinct challenges in their digitization process. Now, from the rise of personalized payment tools for merchants to overcoming barriers in emerging markets, and of course, to the growing collaboration between banks and fintech platforms, there is a lot to unpack. And to help us navigate this, we have Mr. Raman Khanduja, co-founder and CEO of MintOak, who has been at the forefront of building payment solutions for SMEs. Hi, Raman, how are you doing?
I am good, Priya.
Great.
Thank you for having me.
Yeah, definitely. It's a pleasure to have you with us on a podcast today. And I think we are going to talk a lot around digital payment systems and solutions and how they're kind of transforming the SMEs, specifically in Indian context. So before we dive deeper into our conversation, we would like to know more about MintOak, a very interesting name, I must say. So if you could help us understand more about the organization, its specialization, it would be great.
Okay, so MintOak is a merchant SaaS platform. At the core of the platform is an app that allows merchants to accept payments, all forms of payments, cards, UPI, QR, they can record cash, gives them tools to do their business better, and over a period of time, it opens up access to financial services so that they can take loans, cards, etc. from the same app. So one app solving for all things payments, digital tools, and financial services. We partner banks for distribution, who then we white label this app in the bank's brand. These banks then take it to their SME customers as their offering, thus giving the SME the best of both worlds, competitive tech platform provided by a trusted partner, which is their bank. We currently work with three of the largest banks in India, which is HDFC, Axis, SBI. We power their merchant apps. Similarly, we have clients outside India. We work with some of the largest names in the Middle East and in Africa. Today, this app is used by over 3.6 million merchants who do about 30,000 crores of volumes a month. So, in a nutshell, we are like the backstage crew of a payments concert. You may not see us on stage, but we do a lot of heavy duty lifting in the background. Does that help?
Definitely, Raman, and thank you for that fantastic overview. And I really appreciate how clearly you have laid out the company's mission and focus area. And I'm really glad to see how the specific platform or the app that you spoke about is bridging the gap between merchants, banks, and payment providers by empowering a more seamless and a value-driven ecosystem. So with that in mind, let's move into, we would like to know more about you, Raman. So, you have almost like a good experience into startups, and, we would like to know more about you. How has your journey been till date? Or, what triggered your interest, or, what triggered the birth of a MintOak, I would say, and what exactly is your role and contribution towards the company?
Okay, so we started MintOak in late 2017. Three of us, me along with my co-founders, Raman, Sanjay, Nazarat. We were together at Visa. We were a part of the India South Asia leadership team. Spent close to, between the three of us, Raman had spent 8 years at Visa each. Sanjay spent 5 years. At Visa, we got a first-hand opportunity to witness what was happening to the country in general, the way India was progressing and how payments were shaping up. And there was a strong conviction that next few decades belong to India. That conviction is still there. And that's when we said, like, if that is the scenario and payments would be one of the sunrise sectors, why not create something that we can be proud of instead of executing uh, the strategy which is not even designed in India. I mean, somebody else's strategy designed somewhere else to be implemented in India versus building for India and something that, as I said, we could take pride in at a later stage. So that was the genesis. And that's when right after, it's around the same time demonetization happened. And that conviction just strengthened. And that's when we said, like, this is the time. And we jumped in. So that was the birth of MintOak. As regards my role at MintOak, I'm the CEO. And well, this is a borrowed line, but I like to think myself as a chief everything officer. My job is like part strategy, part firefighting, part therapist, and occasionally engaging in gossip to lighten up the environment. On a serious note, my role is to keep us focused in helping banks and acquirers empower merchants or empower SMEs. When I say empower SMEs, that's at three levels. Making payments, which is the most critical activity for any business or an SME, easy to accept, giving SMEs tools to do their business better, and at the right time, opening up access or making the access to financial services easy. So that's what my role is. As long as we can stay focused on this mission, I would say it's a job decently well done.
Definitely, I agree with you, and thank you for sharing. Your experience at MintOak, and how deeply your role shapes the company's direction and impact. Now, building on that, let's move move ahead. Over the last decade, I think we have seen the payment landscape change dramatically. And for SMEs, this evolution isn't just about moving from cash to digital, it's about entering a new ecosystem of financial tools. Traditionally, SMEs had to rely on basic point of sale systems and manual reconciliation. Now they can access integrated platforms that combine payments with inventory tracking, customer analytics, and even lending. These systems aren't just processing transactions, they are in fact empowering data driven decision making. And also, the shift is customer driven. People now expect frictionless transactions, multiple payment options, and instant confirmations. So, if a small business can't match that experience, they risk losing customers to large and more tech enabled competitors. So, how have you seen the payment ecosystem for SMEs evolve in recent years, particularly with the rise of digital transformation?
Some of the things you mentioned definitely validate the transformation that's been happening from, as you said, those legacy POS devices into a more software mobile first approach, integrating payments and inventory, and then adding a layer of lending on top of it. But when you talk about transformation, because we've been in the payment space for quite some time, I'll use some history, some numbers to give you a sense of how I see this transformation. So we quit or we moved out of Visa in 2017. India was just coming out of demonetization. The market had about 3 million SMEs accepting digital payments. That time, digital payments used to happen on POS devices when you would either dip, swipe, or tap a card. So there were 3 million merchants, and the market used to do about 500 million transactions a month on debit cards and credit cards. UPI was just about taking shape. Monthly transactions was to the tune of 36 million. Fast forward to today, we are in 2025, August of 2025. There are 60 million, 60 million plus merchants who accept digital payments today in India from 3 million. The number of digital transactions that are happening at merchants, I mean, UPI alone did 12.5 billion transactions last month. Just imagine, 500 million was the total earlier, UPI 36 million. Now UPI alone is 12.5 billion transactions, merchant transactions in a month. And you add to that another 500 million that still happens on cards. That's the pace of transformation. From 3 million merchants with POS devices to 60 million merchants with just smartphones accepting digital payments. From 500 million transactions to almost 13 billion transactions a month. And you don't need POS devices. That's transformation. The other way to look at it is some of these large players and like Visa, Master, how they measure uh, the growth or evolution of digital payments is they look at something called PCE penetration. How much of PCE, which is personal consumption expenditure, is happening on digital payments? Now, bear in mind, digital payments in India have existed for more than 4 decades. I mean, the first credit card was launched way back in 1981. For the first 35 years, India's PCE penetration on digital payments was about 5%. It moved from 0% to 5%. But from, let's say, 2016 onwards to 2025, today, that penetration is 40%, which means 40% of the transactions that you and I do at shops, technically everything can be converted at digital pay, is being paid digitally. This number used to be 5%. And 40% puts us right at par with some of the most developed markets on payments. They had a head start. They never had the problem of economics, so they could invest in infrastructure. They invested in POS terminals, cards, and they got where they are today. But India, without any of that infrastructure, is walking shoulder to shoulder at like 40% PC penetration, and all in a gap of less than 10 years. That is transformation.
That's a great perspective, Raman, and thank you for sharing that, and of course highlighting the impact of how the payment system ecosystem has evolved by sharing those fascinating and interesting statistics. And of course, I mean, we have definitely, seen the payment ecosystem for SMEs has shifted from being largely very manual and cash heavy to mobile payment solutions or the UPIs that we discussed. And I think the shift not only streamlines operations for SMEs, but also, levels the playing field, giving them more access to tools and efficiencies that were once only reserved for larger corporations. And when we spoke about UPI, I think one of the major, I would say, backbone is definitely technology. We are living in an economy which is rapidly evolving digitally, and the customer payment experience has also become a very important aspect of business success. A seamless digital payment experience is no longer a luxury but a necessity, and it kind of, I think, to some extent influences your customer satisfaction, your loyalty, and to some extent, I think, even overall business profitability. So I think when you have a smooth and an efficient payment process, you are moving one step ahead in terms of retaining customers and ensuring long-term loyalty. Now, studies show that customer retention significantly impacts company profitability, highlighting the importance of a seamless payment experience. And I think, like we discussed, earlier, that in the recent years, we have seen digital payment methods evolve, and it has now that customers want more quick, hassle-free, but also secure transactions. So, according to you, what role is technology playing? If it's just artificial intelligence or any other technology you think is making payments more seamless and efficient for SMEs?
So, technology is definitely playing a very critical role. As I said, when we were at Visa, we used to benchmark ourselves with the US market. Everything digital payments, people would look to the US market because that was considered to be the North Star. At the same time, tech in payments that point in time was POS terminals and cards. And that's something we always understood would struggle to make economic sense in India. And then came UPI, smartphones accelerated, data prices came down, AWS made it easier to set up for startups or more nimble startups to set up. And look at today, as I said, like 12.5 billion transactions and not a card, physical piece of plastic, not a POS terminal involved. You just need a customer with a smartphone and a merchant with a smartphone, and payments are happening. That's tech. That's the core that tech has brought up, changed the face of India, face of payments in India from infra heavy to infra light. That's it. So that's a very critical role tech has played. But the transformation, I will not completely attribute to tech only. Tech has been the backbone, but it's not just tech. If you look at the history over the last 10 odd years, and I would like to split it across multiple phases, starting with 2014-15, when government embarked on the PMJDY mission, a mission to accelerate the banking penetration. Because without that, UPI wouldn't have taken off. That was the starting point. Then came wallets. They brought core payments into the digital arena. Earlier, people used to stand in line for bill payments. That became digital, but that's something that touches every consumer. Cab bookings started happening digitally. That's what digital wallets did. Then came UPI and things started evolving. And after that, you needed smartphones. So smartphones started accelerating because today, whatever we are seeing is because of smartphones. If smartphones were not there, UPI wouldn't have taken off. But smartphones standalone wouldn't have solved it. We tend to underappreciate the impact of geo launch, how they brought down the data prices. Data got democratized. Earlier, it was a luxury, became a basic right for everybody. Everybody has data on their smartphone because it's cheap or it's viable. Then came demonetization, where people had no choice but to start using digital payments. After that, there was still some barriers, some merchant resistance because people wanted to evade taxes and hence there was resistance for digital payments. GST brought in that transparency. Tax evasion became that much more difficult. And a reason not to accept digital payments, they started reducing. And this was complemented with the likes of Google Pay, Paytm spending billions of dollars to make digital payments a habit for individual consumers. And after that, the limited resistance that merchants had to pay on MDR, government removed MDR from UPI, though I'm not a big fan of that, but that did play up in propelling UPI to another level. And everything converged when the pandemic happened. Again, there was no choice but to pay digitally. So, as I said, technology was the backbone. Technology changed the way payments happened. But if it was not for the ecosystem working together, the political push, the regulatory will, the likes of Geo bringing down data prices, people investing in making UPI a habit, and what happened, the likes of pandemic and demonetization, it won't have been the UPI that we see today. So that's how the transformation has happened. Starting with tech, again, not undermining, that's been the foundation. But you have to add quite a lot more things or give credit to a lot more stakeholders to bring digital payments and digitization of payments to where it stands in India today.
Absolutely. And, I think what stands out is how technology is no longer just a convenience. I think it's becoming the backbone of how SMEs, are operating day to day. And I think the most exciting part is that this transformation is not just about speed, it's about inclusivity. How SMEs have the ability to participate in digital economy on par with larger enterprises, and this real shift from survival mode to a growth mode. It's clear that the payment ecosystem will only keep getting smarter from here, and of course, technology will definitely play a very important role. Moving ahead, I would want to shift gears and talk more about MintOak here. The role of banks. I think for a long time, banks were the primary providers of merchant services. But as fintechs have emerged, it became clear that collaboration and not competition might be the smarter move. Now, banks bring credibility, they have regulatory expertise and established customer bases. Fintechs, on the other hand, bring agility, innovation, and user centric design. So together, they have the potential to create SME solutions that are both trustworthy and cutting edge. MintOak works closely with banks across geographies. So how do you see the bank fintech collaboration evolving to scale the SME reach and improve trust in financial products?
Very interesting question, and something that's close to my heart because that's the core of what we do. So, if you look at the SME opportunity in emerging markets like India, the opportunity is massive because one thing you constantly hear across the country is SMEs are not financially included. So the opportunity is very big, and there are banks who are who have the capability to tap into this opportunity. But while the opportunity is big, so is the challenge. The runway is long, but you have to understand resources for everybody are finite, and the change or the pace of change is relentless. This means banks have to be smarter about how they use their limited resources to maximize this opportunity that is available in front of them. Let me contextualize this. If you look at banks, what are some of the key strengths they have? As you said, they have unparalleled trust. Over a period of time, they built big brands. And we know they have deep distribution. Those are the strengths. But in the fast changing world, while these are the strengths, you also need nimble and iterative technology to keep pace with the world. And that's where banks tend to struggle because you may have the best of trust distribution, but if you don't have the right tech, you won't be able to meet the customer expectation that customers have today. And let's be honest, for banks, they built this tech, whatever tech they have, over the last few decades. So it's not easy for them to fix it overnight through a big IT project. So how do you solve it? There is a massive opportunity. You have some advantages, but you're missing out on a core element that the world needs today, which is nimble and agile tech. And hence, the smarter way is to double down on your strengths, which is distribution, brand, trust, and partner with fintechs for tech, a big gap that you currently have. That ways, you would be able to roll out products faster, roll out products that are relevant. Most important, look at the end customer, be it a customer or an SME. They would get the most competitive tech product delivered by their most trusted partner, which is the bank. So it's a win-win for the customer, and as long as the customer or the merchant is winning, the bank would tend to gain. So I would say it's a matter of playing smart. I mean, 15 years ago, there was a lot of noise about disruption. And I say disruption is such an abuse term. Everybody wanted to disrupt banks. This was right after the global financial crisis. Look at today. All the banks still exist. They are more relevant than they were at that point in time. They are much larger than they were at that point in time. But the opportunity is still massive. And as I said, like the way technology is changing, the best approach even for fintechs is to partner with banks because it's not a zero-sum game. The opportunity is an ocean, and it's like with both these things coming together, the nimbleness of fintechs and the trust of banks, that can actually really solve it for the customers and in the process the stakeholders, which is the banks and the fintechs. So that's how I think the space is changing or what the space needs. That's my personal opinion.
Definitely, and thank you for sharing that perspective, Raman. I think for SMEs, the combination of banks and fintechs can mean faster access to credit and smarter tools for managing the entire operations, and as well as having products that they can actually trust. And from what you have just shared, it's evident that MintOak isn't just enabling transactions; it's helping reshape the SME ecosystem by building trust, digital trust, and creating scalable impact across geographies. And I think it's a very exciting time for this space. So I think, as traditional banks and fintech continue to come together, they definitely promise groundbreaking solutions. So one last question for you, Raman: how do you see the overall fintech landscape in India and other emerging markets reshaping the access to finance for SMEs in the next 3 to 5 years?
Interesting question. I think we are entering what I would say would be a golden window for SMEs in India and emerging markets. You spoke about credit, and earlier we were talking about tech, and you did allude to AI. Look at what AI is doing to fintechs in the space. AI and data analytics are like giving an X-ray vision to merchants, to fintechs, to look into the lives of the merchants. You're no longer guessing what the SMEs need. You can see their sales cycles, you can see the customer patterns. So you can predict not just what they need, you can predict when they need it. Earlier, I remember there were times when companies would just spray and pray. They would carpet bomb with messages about loans. I mean, let's be candid. Today also, I get so many text messages, so many WhatsApp messages. They just bombard you without knowing whether I need it or not. Look at how things are changing now because you have all the data. You can reach out to the, let's say in our case, the SME, knowing fully well that they will. For example, I can target an SME saying festive season is approaching. Last year, your sales jumped 100% during the festive season. Do you need extra money to accelerate this time? Now that's relevance. Or we are in Bombay, monsoons are fading. This is August. After that, we will approach or get into a hot spell. Let's say the weather predictions are that the temperatures will again touch 40 degrees. You reach out to a grocer saying, when the temperature reaches 40 in Mumbai, we've seen the sale of soft drinks and ice cream goes up by 50%. Would you want to stock these products in advance because the temperature is predicted to exceed this limit in the coming days? Now, that's relevance, that's personalization. It's like you're giving them real insights that are relevant to them. And the beauty is, the more they use the platform, the sharper the insight gets. It's a bit like it's quite like how you get Netflix recommendations. So that's how things are changing now. Coming specifically to like in the next 3 to 5 years, I think in India specifically, the fintechs will move just beyond payments and lending to become operating systems for SMEs. We're already seeing UPI, account aggregation, embedded finance converging to make credit, insurance, and investment available in just a few taps. Something that was totally physical, now you can access all of these in a few taps, and this journey will only accelerate. As far as other emerging markets are concerned, I think we're in a space where, thanks to how UPI led the way, India's become a North Star for a lot of emerging markets. And a lot of these emerging markets are looking to emulate. They would want to replicate the India playbook, but at the same time, adapt it to local nuances. So it'll be for emerging markets, it'll be light infrastructure, mobile first delivery, interoperable systems. The big shift would be data driven underwriting. Everybody says data is the new oil, and that's where we see like India has already started the journey. Emerging markets will shift more and more towards data driven underwriting, bringing in millions of previously so-called invisible SMEs into a formal credit system. That's how I see the emerging markets kind of emulating India, though slightly nuanced with local flavors. And for the SME ecosystem, India or emerging markets, the impact won't be just financial inclusion. It would be productivity inclusion as well. As you were earlier alluding, SMEs will get tools, they'll get insights, they will get access like they never had before, turning them, and again, you would mention this, turning them from just being survivors to becoming drivers of growth going forward. So that's how I see the next 3 to 5 years holding up, especially for the SME ecosystem across India and the emerging markets.
Definitely. And I think by harnessing these insights, SMEs can make more informed financial decisions, optimize their payment processes, and ultimately drive their business strategies forward. And as the digital economy continues to evolve, the synergy between real time payments and advanced technologies will be instrumental in shaping the future landscape for small and medium enterprises. Well, thank you so much, Raman, for taking out the time and effort to be on a podcast today and helping us understand that digital transformation is reshaping the tools. And I think the future of SME payments lies in collaboration between banks, fintechs, and the merchants themselves. And of course, like the payments are evolving, one thing is definitely clear, that the future is here and it's being built in partnership with these important stakeholders of the ecosystem. Thank you so much. It was lovely chatting with you, Raman.
Thank you for having me. It was a pleasure. Podcast.
Great. This is for our listeners. I hope you enjoyed today's episode. Don't forget to leave a review or write down in the comments like what is the next episode that you would like to hear about. And until next time, stay tuned. And this is Priya Deolani signing off. Thank you so much.